This week is dedicated to tying up any loose ends. So we'll be wrapping up journal entries and it'll be a mini lesson on some new accounting concepts. Now I know many of you are new to accounting, so this video will give you a better context to the work that you have done. And it's specifically for those of you that have been just copying the structure that I laid out. It's for the people that don't fully understand what happens when you debit an account or what happens when you credit an account. And that's totally fine, but by the end of this video, you'll get it. And for those of you that have already taken your basic accounting classes, just feel free to skim through the video and fast forward the parts you already know. As far as the business need is concerned, there won't be anything new to cover this week. I'm dedicating this week to strengthening your understanding of the work. So these are the journal entries you created in week 1. You debited accounts receivable, and you credited room revenue and sales tax payable. So first of all, what the hell is an accounts receivable? We hear about it all the time, but what exactly is it? Well, this is where we go back to the waiter example. So let's say you're sitting at a restaurant, okay, and you just scarfed down your $30 deluxe sushi combination, which was really just 6 pieces of fish. And now you're talking to your roommate, trying to decide what to order from the value menu at McDonald's after you leave because you're still starving. Now the waiter comes, and I want you to imagine him giving you the bill. Because with this bill handoff, 2 things happen at the same time. One thing is that you now owe the restaurant $60. The other thing is that the restaurant just made $60. So the definition of accounts receivable is money owed to a company. So the moment your waiter hands the bill to you, imagine this journal entry being made. There is now a debit or an increase of money owed to the restaurant, and there is a credit, also an increase of revenue earned to the restaurants. Now, this last statement should have confused you because when I said debit, I said increase. But when I said credit, I also said increase. But if you remember the videos from week 1 for your journal entries, I told you to always put a negative sign in front of the amount when it's a credit. So logically speaking, shouldn't it be a decrease because it's a credit? So the answer to this question is this accounting equation. The answer to this question is this accounting equation. Assets equals liabilities plus owner's equity. Now, this equation itself can turn into really 10 videos of me explaining all the nuts and bolts of accounting, and I'm sure you don't want that, so we'll just keep this short and simple. Just remember this. If you want to add anything to the left side of this equation right here, you need to debit it. So you just think about it as a math operation like adding or subtracting. So we see that assets is on the left side of this equation. So if we want to increase assets, we need to perform a debit. Now going back to our waiter example, accounts receivable is part of the assets component. And because we wanted to increase accounts receivable, increase the money owed to the restaurant due to your $60 sushi, we would need to debit it. So let me ask you, what if I wanted to increase the right side? Would it be a debit or would it be a credit? Good answer. To increase the right side, everything needs to be credited. So even though on the left side it's a debit to increase it, on the right side it's a credit. So because revenue earned is part of owner's equity, we need to credit revenue earned if we want to increase it. And because we are increasing it because the restaurant just made money, they earned revenue due to the transaction, we will be crediting it to increase it. So hopefully by this time, my misleading statement is now clarified. It should now make sense that even though we're crediting revenue, we're still increasing it because the account is on the right side of this equation. Now, what if we want to credit something on the left side of the equation? What do you think would happen to it? Would it increase it or would it decrease it? That is correct. You're on a roll. It would decrease it. So if we were to credit this asset from the left side, we would essentially decrease it. Now let's go back to our waiter example. So you're looking at this bill and you show it to your roommates. And he says, "Hey man, can you get it for me? I'll just Venmo you." And in your head, you're thinking, "This asshole hasn't even accepted my charge for last month's rent. Fuck this guy." But you still pay for it because you're a good friend and a good roommate. You also decide never again to pay $60 for 12 pieces of sushi. Never again. Now, as you hand the waiter your Visa card to pay for the bill, what journal entries do you think we need to create? And I want you to, again, think about our accounting equation. The answer is the journal entries you created for the challenge tab. So we would credit accounts receivable and we would debit cash. Now, because accounts receivable and cash are both part of assets, the left side of the equation, we know that to debit means to increase and to credit means to decrease. And again, it's because it's on the left side of the equation. So we credit or decrease accounts receivable because the restaurant no longer has money owed to it. It's been paid off. It's been paid off by the Visa card you gave the waiter. And that is reflected in this entry here, where we debit or increase cash. Now, just a quick thing here to note, and I mentioned it in week 1 as well, but all journal entries require 2 of them at once. It's called double entry bookkeeping. And don't forget, it's always a debit and a credit. So when we look at this equation, when we affect or change one component of it, we need to also change another component. I mean, that's like Algebra 101, right? You can't just only affect one. So that's why for journal entries, we need both a credit and a debit, and the respective amount has to be the same. Now, the last thing I want to cover is tax, because you also included tax in your journal entries. So let's just say tax is $10. With tax, I want you to ask the question, who's paying for the tax? Is it the restaurant or is it you? Because a common misconception is to categorize tax as an expense, but it's not an expense in this case. For sales tax, at least, it's not an expense because you, the customer, is the one paying for it, not the company, not the restaurant. You're paying for it. So as a result, we increase or debit $10 to the restaurant because you owe the restaurant $10 for the tax. Now pay attention here because this is the important part. Even though you owe the restaurant $10, the restaurant didn't make $10. They didn't earn that $10, or else it would be reflected in revenue earned. Later in the month, that restaurant is going to have to hand the city a check to pay the taxes owed. That's why we have this credit here, a credit of sales tax payable. Now, sales tax payable is part of liabilities, which is on the right side of the equation. So let me ask you, as we credit sales tax payable, which is liabilities, do you think we increase it or do you think we decrease it? You're a genius, man. Correct. We increase it. All right, and that basically just sums up all the journal entries you did. I mean, I used a restaurant as an analogy, but all the concepts I mapped out here is exactly the same at the Ramada. So, instead of the food revenue, it's the room revenue. But don't forget, as shown in the previous week, we also break that down even further with the different market segments. And if you think about accounting, the way I talked about crediting and debiting, increasing and decreasing, we're basically just dealing with basic math, right? And if you have this formula down and you got an understanding of this credit and debit nonsense, all you got to do from here is just to figure out your accounts. When you look at the different accounts, you just got to figure out, okay, so is this part of assets or liabilities or stockholders equity? Now, I do want to mention something here, and it is related to a difference between the work that you've done with the Ramada compared to this restaurant analogy. So now let's take a look at, or let's revisualize the waiter example, right? The waiter hands you a bill, and almost immediately, if you think about it, right? No more than 10 minutes after, you're already putting your Visa payment card onto the bill and giving it back to the waiter, and he's going to charge you. So if you think about the time sequence with these journal entries, you're paying almost immediately after you're charged with the bill. But at the Ramada, this might not necessarily be the case, because let's look at June 20th, right? The example we always use. There's the reason why the first set of journal entries where the bill is given. There's a reason why this amount here is different from the payments. It's on the same dates. They're both June 20th, but even though in the restaurant example the amounts are the same, in at the Ramada they're not. And it's because the time sequence of hotels is a lot different from restaurants. At restaurants, the food is paid off immediately, but at hotels it's more situational, where there are cases where we charge the guest immediately after we bill them, but there are also cases where the guest pays, upon checkout, which is 2, 3, 4 days after they're billed. Or there are even other cases where, they're charged well in advance, maybe 2 months, 3 months before they even arrive at the hotel. So that's why I just wanted to kind of clarify and explain why in the restaurant analogy, the amounts here are the same, whereas as if you notice, or if you recall from the journal entries you've created, the billing and the payments, the amounts are different. Now, again, for this week, there's no new material. You're going to be doing the same work as you did last week, but the next video will be dedicated to making your life 10 times easier when I show you some new Excel tips and tricks. So stay tuned.